money. The keynote speaker for this evening is Miss Odetta King, who is also my Senior Marketing Director at the World Financial Group. Miss Odetta King is super passionate about educating our community. She's a business professor at a New York University and a proud and very active alumni of NYU. She speaks at and offers financial literacy workshops in several public schools and churches in her local community. She's the author of 4 books. If you aren't stacking them, you are dropping it is one. Another one is This is Why You Are Broke. Then there is Let's Get Rich Journal Planner, which helps you to plan for your finances. All of these can be found at odedaking.com, but also on Amazon. Her most recent book is, which is her 4th, is Playground Millionaires: How to Set Up Your Kids to Be Millionaires. That's a very good book for especially a young family. Most importantly, she's been with World Financial Group for 7 years. A 6-figure diamond ring earner in World Financial Group, and she has helped hundreds of families with their personal financial goals while building a big financial agency of licensed financial professionals all across USA and Canada, with the goal of reaching and helping many more families save their financial future. Without further ado, I present to you Miss Odetta King.
Hi guys, how's everybody doing this evening or afternoon, I should say? Everybody doing good?
Yeah, I'm fine.
Welcome. Guys, we are super excited for Miki, who has embarked on this life-changing opportunity, but we don't want to be selfish, right? We want to get this information, but we don't want to keep it to ourselves. We just finished helping a nurse, and Donna, who's on this call, we just finished helping one of her friends, and the lady was practically beating up Donna, saying, Donna, you knew this information and you didn't tell me. How could you not share this with me? It's so good. And it just made me and Donna realize that we cannot be selfish with this information. What I'm about to share with you guys today, it's how many of us, they tell us go to school, get a good job, and we're gonna be okay. Well, how did that work out for most of us? Are we okay? We might be okay, but is it where we want to be? Right? And I'm going to do something a little different. I want to share some of the amazing people on our platform that are Black, right? That are African American, that are from different parts of Africa. And these are people who heard the same message that you and I are going to hear today, and they took this information and they ran with it and built such a huge agency in the financial world that they're helping a lot of their own. And the first person I'm showing here is Dr. Fumbo and his wife, who I believe are from Cameroon. This is as of 2023. Him and his organization have made over 9 million, because now we're in 24, right? This is the man that is helping the most Black people in our community. And he heard the same message like you and I 4 or 5 years ago, right? So the same opportunity that he has, all of us have. And those of you that are on this call today, you're also going to have the same opportunity, not only to help yourself, but also to help families. Then we have Dr. Kwende also, who actually had a webinar today. And his story, again, all of us have the same crusade, the same message. We have great jobs. We went to school. We have a PhD. We have a master's. We have a bachelor's. They told us we're going to be great. And we did not do great. We did okay, we did good. But what WFG has afforded us is time freedom, money freedom, and location freedom. How many of us can say our job is giving us time freedom, money freedom to make unlimited income, right? And location freedom, meaning you could work from anywhere, any part of the country or the world, and still help family. Still help family. You could be in Ghana, you could be in Guyana, where I'm from, you could be in Dubai, you could be in any part of the world and still help families with our platform. Then we have Lillian Apano, who is also a registered nurse, being in this company for 3 years and made her first $1 million in the first 2 years. Nobody she knows in America except for the people at her job, right? So I show you example of people of color, all not from the US, but immigrant, and the same information that they heard, you're going to get an opportunity to also hear it today. So who are we? Our company name is World Financial Group. We are based in the Netherlands. Our parent company is in the Netherlands. However, we have representation all over the US, Canada, and Puerto Rico. So because we are here in the US, our parent company in the US is in San Francisco, and World Financial Group, which is a division that all of us, 74,000 licensed agents across the country, we are on a mission to financially educate our community, right? So when someone sits with us, they're first going to understand about money. How does money work? And there's 3 rules when it comes to money. The first rule is, how many of you have heard, and you can put it in the chat because I want this to be very interactive. How many of you have heard the word compound interest, right? We've heard about it, but what does that mean when it comes to your money? How does that relate with your money? Well, compound interest tells us the formula how your money is going to double. So the formula is you take the number 72 and you divide that by the rate of return, which is the interest. And that will give you the number of years your money will double. So if you're getting 4%, 4% divided by 72 divided by 4%, that's 18 years. Assuming you have 10,000 today, your 10,000 will take 18 years before it doubles. Now, what if you're getting 8%? Now, 72 divided by 8 is 9 years. So what if you're getting 12%, far right? Now that money is going to double every 6 years. So if we look at the percentages, the higher the percentage, the lesser time your money is going to take to double. Somebody earning 12% is 6 years only. So when it comes to growing and accumulating wealth, we got to look at the interest. 12% is 6 years. It's every 6 years is going to double. So if you have 10,000 today, 6 years only, it doubles to 20. Another 6 years, it doubled to 40. So in 36 years, here we have 3 separate individuals. They both have a $10,000 each. Person A at 4%. In 36 years, he looks up. He did good. His 10,000 grew, right? So he's saying, Odetta, I did good. My money grew. I'm good. His 10,000 grew to 40. And yes, he did good, right? But then you have the person who got the 8%. Wow, her money almost quadrupled to 160. And she's saying, I did good too, Odetta. But there's always better, right? So now the person who has 12%, Wow. They are going to have $640,000. So guys, a lot of us are saying, I'm good. And there's nothing wrong with being good, but don't we want to be better? Put in the chat if you want to be better. You might be good with money. You might be good with whatever we have, but don't we want better? There's more money out there, right? We want better. So good is good, but what about having better? What about having more money? So many people, when I ask them, let's talk about your finance, the first thing they tell me, oh, that I'm good. And that's good. But don't you want better? Right? We just finished helping, like I said, a nurse, and she was like mad with us for not sharing this information. I'm like, you see, Donna, this is why we got to share this information with everybody, because some people, when they find out about this, they're mad they didn't know about it earlier. I'm mad I didn't know about this earlier. Guys, I've been living in the USA. My parents have been living in the USA for over 36 years. What if someone had sat with them and said, hey, let me show you this type of account that you're going to have compound interest. I want you to put $100 over here or put aside 10,000 and just forget it. Just let it, forget it, set it and forget it. They could have had 640,000 today, but they didn't know. Nobody told us about these things. So as agents in this business, we are not going to be silent. We don't want to be the silent friend who knows information that could share and help a neighbor, a colleague, a business friend, somebody at the church, and keep it to ourselves, right? So 4% exists, 8% exists, 12% exists. And I'm going to show you where. Now, when you and I put our money in the bank, what does the bank do with our money? What does the bank do with our money?
They invested.
They invest it, right? And I'm going to show you one of the places where the banks invest all of our money, right? Like I said, 4% exists, 8% exists, 12% exists. And one of the places that the banks heavily invest this money, or let me ask you another question. If you have 50,000 in the bank today, right, and you go to the bank on Monday morning and you say, hey, I want to draw out my entire 50,000, give it back to me, give it all back to me, what will the bank tell you? Are they going to say, okay, here, take it all back, here's the 50,000 right now? What do they tell you?
They don't have it.
They don't have it. They don't have it to give it to you right away, right? They tell you, give me a couple of days, maybe give me 3, 4, 5 days and come back. They're not in a position to give it all back to you right there and then. Why? You have to ask in advance, right? But if you have 50,000 in the bank, why can't you get it all back right away? Why you have to come back? Why you have to ask for it in advance? Why you have to come back 3, 4, 5 days? Why? Because the bank is in the business of investing and lending out that money. So one of the places that the banks put all of our money is, and I'm going to show you a public website, and that's the First Evidence, right? This website, you can Google it, right? It's public knowledge. It has nothing to do with our organization. It is called usbanklocations.com. Now I'm going to zoom in and you tell me which one of these banks are yours. You can type it in the chat or you can just say it out. Do you see your bank here? Which is your bank? Citibank is mine. Bank of America is mine. Is Capital One there? Yep, Capital Bank is mine. Which one is yours? TD Bank, Chase, okay. Capital, Citibank. Okay. So guys, when we put our money in the bank is not keeping that money in a vault. Make no mistake, it's not sitting in the vault. They're going to now repurpose that money and invest it out, loan it out, and it circles out to one of the places that they put tier one of their money, and huge sums of money, billions of dollars, is in life insurance assets. Do we think they're buying policies to bury people? Are they just buying all these $1 billion in policies to bury people? What do you guys think? No, they're not. I'm going to show you how you can become your own bank, how you can cut out the middleman and you can get this 12% for yourself. Because right now, when you give the money to the bank, how much are you getting in interest? Put in the chat, how much interest the banks are giving you? How much interest Capital One, Chase, Wachovia, Citibank, Bank of America? What's the interest they're giving us? 0 point something. Zero, right? If you get 1%, you're lucky. But now you learn the rule of 72, right? So let's say they're giving you 1%. 72 divided by 1% is 72 years. So if you have 10,000 in the bank, it's going to take your money 72 years to double. What is that going to do in 72 years with inflation? Right? What is that going to do for you with inflation? So the first rule to money is, yes, we got to earn money. Yes, we have to save and grow this money, but we're also looking at the interest. The higher the interest, the more your money is going to double and the quicker. So you'll have more money. First rule, accumulation. So you could have two people coming from Ghana, one of them getting 4%, and they're like, I'm good. I just came from Ghana. I got a good job. I'm working. I went to school. I got my degree, and I got 4%. I'm doing good because I'm getting more than 1% like everybody else. I'm doing good. But it's good, but that's only going to yield you 40,000. But then you have someone else who comes to this country and they listen to Mickey, and Mickey tell them where to save this money. And in 36 years, 640,000, because we know where to put the money. The second rule to money deals with how is the money growing. So there's 3 places you can put your money: in the bank, and that's going to be a fixed rate. So here your money is safe, but it's not going to grow a lot. And in fact, money in the bank right now, we're losing. How are we losing money? By saving in the bank. Put in the chat, how do you think we're losing money by saving money in the bank? What do you guys think? How are we losing money?
Inflation.
Inflation, right? It's not growing. If you're not getting at least 4 to 5% money in the bank, you're losing to inflation, because inflation is 4 to 5%. So just to be even with inflation, you got to be earning more than 5%. Most banks are not giving 4 to 5%. So money in the bank is straight up losing. Now, yes, we have to use the bank. We have to keep money in the bank to pay bills, but you don't want to keep too much in the bank because you actually lose into inflation. So the money is safe, but it's not going to grow a lot. The second place most of us are putting our money is in the stock market. And here we're straight up gambling. We have no control over the stock market. We have no control how much we're going to make, and we have no control how much we're going to lose. So here we're just speculating. We're hoping for the best, and life is just going to happen. So there's no safety, but there's growth potential, right? There's growth potential. Now, I want you guys to be rich and stay rich. I don't want you to be rich today and broke tomorrow. I've had many clients said to me, Odetta, where were you when I had 200,000, 300,000? Well, where's the money now? Where's the money now, right? So they made it, but then they lost it back. So stock market is not guaranteed. It's whatever it is, that's what's going to happen. The third place you can put your money is with insurance company. Are we seeing a team here? This is why the wealthy gets wealthier, because they know where to put their money and they know how to grow the money and they know how to also keep the money and never lose the money. So when you put your money with an insurance company, and by the way, some of you might be saying, well, Odetta, I already got an insurance company. Hold on. Not every insurance company offers this type of account. This is a special type of account that's called IUL, or indexing your money. And there's only about 50 companies that offer this type of account. Now, when you put your money with an insurance company that offers this type of account, now your money is safe. You never ever lose money when the stock market go down. And now your money is guaranteed to grow. So when the stock market go up, your money go up. But what happens? You see this gray line? What happens when the stock market go down? Your gains are locked in. So we go up, stock market crash, we stop. Stock market crash, no loss. Stock market go up again, we go up again. So here, you're guaranteed to build wealth, you're guaranteed to grow your money, and there's no interruption with losing, right? So now that you know the 3 ways your money's being grown, where is your money sitting right now? Is it all in the bank with a fixed product, meaning it's safe, but you're not growing a lot? And in fact, you're losing if you're not getting 5%. Or is your money in this tied up in the stock market where you have no control how much you make, how much you lose? Or do you have your money in an index account with an insurance company that is protecting your money and insuring your money? Where do you have your money right now? Put it in the chat. Is it fixed? Is it variable? Or is it index? And which do you think is best? Right? Which do you think is best? Have you ever heard or understood how your money is growing? Because you're working hard for it, and some of us are saving it, but are we protecting it and growing it? Right? Third rule to money is taxes. And boy, they fooled us here big time. In fact, I would say they scammed us, because I went to NYU and I never ever sat and took a personal finance class or classes on taxes, even though they prepared me to have this great career. Like, they didn't prepare me to manage my own money. How many of you took a personal finance class in school? Anybody? Did anybody take a personal finance class in school to learn how to manage your own money, to learn how to manage your paycheck, to learn how to grow your paycheck, grow your savings, grow your account, grow your investment account? Has anybody taken a personal financial class to learn about money? Right? I didn't think so, right? And being a professor, we still not doing it. We still not teaching these kids personal finance. The kids that are learning finance, they're not learning personal finance. They're learning finance to go work at a Charles Schwab or JP Morgan Chase or one of those investment firm or companies to make the company money, right? Yes, they're going to get a paycheck, but they don't even know how to grow their income. They don't even know how to grow their savings. So I can honestly say, being an educator, we are totally failing society. But then again, the system is bigger than me. I could only do what I could do on a college and university level. It's way bigger than me. This is why I do this business, because here I could shape and control and help my community. At the university, I'm limited, but here I can share this with everybody. So how does your money get taxed? Well, there's three tax buckets. There's tax now, which means you get your paycheck. Uncle Sam is going to tax your paycheck before you get it. It is what it is. Now, when you put your money in these types of account, a checking, savings, CD, stocks, mutual fund, as the money grow, you're going to pay capital gain tax because you gain interest, right? You gain money. So we're going to pay tax on the gains. It is what it is. The second way our money could be taxed is in a tax later account. These accounts, 401k, 403b, 457, all of your job retirement accounts, right? Your job retirement account that you have with your job, those are the ones that Uncle Sam loves. And those are the ones that Uncle Sam is making it easy for every company to sign up their clients for, to sign up their employees for. Guys, is it better to pay tax on the seed when your money is little? Or do you want to pay tax on the harvest when your money gets bigger? Which do you think is better? Seed or harvest? Seed or harvest? Seed or harvest? What do you guys think? You want to pay tax on the little money or the big money? Little money or the big money, right? There's a saying in hint, the more money you make, finish the sentence. The more money you make, finish the sentence.
The more tax you pay.
That's it. More money you make, more tax you pay. More money you have in these accounts, more taxes you pay, okay? So if you're gonna beef up these accounts, more taxes for the government, not for you, for the government. Guys, also understand these accounts, if you were to get sued, your 401k, your 403b, your IRA are going to be part of the lawsuit to pay your creditors and your debtors. So they don't tell you these things. And quite honestly, it's not their job. It's not HR job to educate us on these types of accounts. Their job is to say, hey, Angela, we have this at the work. You can sign up for it. It's good. It's going to help you save. That's it. So we cannot blame HR or a job for not educating us about these types of accounts, right? So here, when you put money in these accounts, just know that you're literally setting yourself up to give more money to the government, and you don't even know how much you're going to get to keep. Now, the second question I want to ask you with regards to taxes is 20, 30, 40, 50 years from now, do you guys think tax will go up or come down? Up or down? Up or down?
Up.
100%. 100%. In fact, I didn't say it, but let me show you, right? I didn't say it, but all indications tells us it's going to go up. Our former controller of the United States says, based on the current fiscal path, future taxes will have to not only go up, but it's going to double. Or the country will go bankrupt. So all indications, it has to increase. So how does that affect your money? If we know taxes are going to increase a lot in the future, why is that a concern to us or to you when it comes to your money? And by the way, here is another public site that I'm going to share with you, right? Because I like to show, I mean, as an educator, we like to see proof, right? We like to read stuff. So we're always like, where did you see that? I want to know. Like, cite me that article, right? Where's the reference? I want to see the proof. Well, here's the proof. Which, by the way, these has nothing to do with our organization. These are all public websites, right? If you go to usdebtclock.org, right? This will literally show you a live clock of the debt as a country. How much in debt as a country we are in. US national debt, 35 trillion. Over here, right? The national debt as a country is 35 trillion, but look at the revenue. Look at the US federal tax revenue. How much money are we taking in? 5 trillion. We're taking in 5 trillion and we owe 35 trillion. Guys, the math is not mathing. We are beyond broke, right? My third book, This Is Why You Broke. We are beyond broke. We are like devastated as a country. So all indication tells us taxes has to go up. All forms of taxes. So what does that mean to your money? Well, all of this money you have in these accounts, prepare to be like quadruple and double tax on this money, which means how much you're going to get to keep. You don't know how much you're going to get to keep from your 401k, your 403b, your IRA, your annuity, your pension, your TSP. You don't know. So let me understand. We're working so hard and putting all this money. We just had a client we spoke with earlier today. She's like, "That I'm doing good. I'm putting 15%." I'm like, no. She's putting 15% of her paycheck into her plan for TSP. Why? She doesn't know. All she knows, she's saving, which is a good thing. It's a good thing, yes. But do you know you're putting too much? So here's a rule of thumb for everyone right now on this Zoom. If you have a job retirement account and your job is giving you a match, the match is good. Rule of thumb, you only want to put enough to get the match, not a penny more. So if your job is matching your 401k 5%, you put 5%. Don't put 15, don't put 10, don't put 8. Why? You just learned why. Why do you want to keep beefing up these accounts and you're going to pay so much in taxes that you don't even know how much? Taxes will double. Taxes will increase. The more money you have in these accounts, the more taxes you will pay. Wealthy people understand these concepts. So now let's look at a third vehicle, because you're saying, oh my God, Odetta, this is really bad. I had no idea I got all my money in my 401k or have a lot of money in my TSP. I'm like, wow, I didn't know. Yeah, this is why we do these webinars, right? So now the wealthy people, they play the tax game. If you don't understand this game and play this game, you're going to be played. And I'm going to say that again. If you don't understand the money game and play it to win it, you're going to get played. So now when you have money in tax-free accounts, all of these accounts here, you pay your tax in the beginning on the seed when the money is little. So later on, when the money gets bigger, you keep all of it. You keep all of it, right? So now that you understand the 3 tax rules, think again. You don't have to write it. Where do you have your money? Do you have most of your money in tax now and tax later, and some of it, very little, in a Roth, for example? Where do you have your money? Right? Now, the account that I mentioned to you, where the bank is already putting your money, whether you believe it or not, but I just showed you the website, usbanklocations.com. If you want to have a solid financial foundation, if you're already saving money, if you already invest in money, and you do not have this type of account, you, my friend, have holes in your accounts. You, my friends, have holes in your financial house. There's a leakage. There's holes, right? You have a pocket with holes and money is slipping through the crack. Money is slipping out in taxes. Money is slipping out in market risk, stock market, right? So Transamerica, like I mentioned, is one of our parent company. They've been around for 119 years old. I don't think we have anybody that's 119-year-old on this call, right? 119 years old, Transamerica has been around. And Transamerica is the #1 selling IUL for 11 consecutive quarters. Guys, that is back to back to back to back winning, holding the #1 spot. We're also the #1 ranked by Forbes Advisor term life with living benefit. Now, I don't know if we have some nurses on, but can anybody tell me what is living benefit? Anybody know what is living benefit? They want to share. And I know we have some, I think we have some nurses on. Can anybody share what is living benefit? Money while you're alive. Donna said money while you're alive. So pretty much in plain simple term, God forbid, if someone gets ill, they cannot work. They have a chronic illness, they have a critical illness, or even a terminal illness. Cancer, heart attack, and stroke are the 3 major illnesses that are sweeping the nation. Fortunately, and thank God, you know, some of them are not dying, they're beating it. But for that 1 year, 2 year, or months that they're not able to work, where is the money coming from to still pay the mortgage, the rent, the car note, etc.? So when you have a plan that includes living benefits, this is money for you and I while we're alive, not when we're dead. There's a difference between life insurance and living benefits. Life insurance is money for your loved ones when you pass away. Living benefits is money for you and I while we're alive, right? To be able to have access to hundreds of thousands of dollars, possibly even millions of dollars, depending on how big your living benefit is, right? So Transamerica, we've been named for the company for best living benefit by USA Today. So when you have an account, this special type of accounts, which by the way, is called IUL for short, but it's Index Universal Life. This is a multifaceted account. When you put money in this account, just like your 401k, yes, you're saving and you're investing. That's great. However, here, the max you can earn is 13% growth. The good thing is there's a safety floor. You are guaranteed to never, ever lose money. So even if the stock market go down, you ain't ever losing money. Never, ever, ever, ever losing money. Your principal is protected. Now, for me, that was a big deal because I've had 401ks, I've had IRAs, and I put a lot of money in those accounts when I was working in corporate America. But I was also one of those disgruntled employees that every time I lost money in the stock market, I would call the plan director and be like, what is going on? Why did I just lose money? Not a lot of people did that, but I would watch my statement. I would log in and watch my accounts. So I loved it when it was going up, but I dreaded when it was going down. So when I found out about this plan, I didn't hear anything else except never losing money. I didn't care about the life insurance. I didn't care about the living benefits, or maybe I didn't understand it that much. All I heard is, Odetta, you are never going to lose money. And that was music to my ear. And I said, sign me up. But it's more than just not losing money. There's also tax-free access to your money penalty free at any age. So when I first bought my first property many, many years ago, I took money out of my 401k to buy that property. I had to pay a penalty and taxes. So I had to pay the taxes. And even though it was money from my 401k, I took a lot more. So I had to be penalized because I was under age 59 and a half. And I had to pay the taxes. Now today, if I want to buy another property, I could log into my IUL and I know exactly how much money I have. And I call Transamerica and say, hey, I want to move that 100,000 to do whatever. I don't even have to explain to them or ask them for my own money. I just call Transamerica and say, hey, I need 100,000 from my cash value IUL. In 5 days, it's wired back to my bank and I go deal with that property, right? No penalty. I'm not 50, I'm still under 59 and a half. There's no penalty and I don't have to pay taxes. Of course, 7 years ago, I didn't even understand this part. All I heard, Odetta, you're not going to lose money. And that was good enough for me, right? But this policy has so many more benefits. And then the fourth box here that you see is protection and living benefits. Now, I know we're Black people in this call, and when we hear the word life insurance, put in the chat, what do we think when we hear the word life insurance? When somebody say, hey, let me take out the life insurance on you, what do you think? Death benefit. You're going to think, oh my God, you're trying to kill me? We're Black people. We know how we are. You trying to kill me? No. I'm not taking no policy. No. Honey, this is where the wealthy people are shuffling. This is where they are stuffing. This is where wealthy people are putting the most money. They're not thinking about debt, right? So today, now I know this information, but back then I didn't know it. So 10 years ago, if you had told me that to take out a policy, you know what I would have told you? No, I'm good. I already got my burial money. Clueless. And there's people today that still, when you tell them take a policy, they're gonna be like, no, I'm good. I'm good. I'm not gonna die no time soon. I'm not gonna die no time soon. I already got my burial money. This is what you'll hear. But guys, an IUL is not about the dead. An IUL is about the living. An IUL is about building wealth. An IUL is about tax-free money. An IUL is about growing your money risk-free. An IUL is about being stone cold wealthy while you are alive and spending this money while you are alive, right? I say this all the time. My EVC, Jonathan Marion, he took out $250,000 from one of his IUL to buy his G-Wagon. Now, he could have gone to the G-Wagon place dealer and take a loan from them. But guess what? He would have had to pay. What would he have to pay? How much do you think the interest would have been on that loan for a G-Wagon? What do you guys think? How much would have been the interest to borrow $250,000 for a G-Wagon? 6 to 8%. But you know what he did? He logged into his Transamerica account. He knows how much he have because you could see your cash value. And he called Transamerica and said, hey, send me back $250,000. Then he went to the G-Wagon place, bought the G-Wagon cash because he's his own bank. And the same mentality, he's going to pay back himself as if he was paying the G-Wagon dealership. He's going to pay it back to himself, the interest, and put it into his account and build back his IUL because he just took out $250,000. That's what you call becoming your own bank. Instead of going to the bank and borrowing money, you go to your IUL because you funded your IUL aggressively. Now you have money that you can take out, right? So the protection is the life insurance. Yes, we're all going to die someday. So when we die, we're going to bless the next generation. But then the living benefit is money for you and I that we have access to. God forbid we ever get sick. And if we don't get sick, life is great, right? Life is a whole lot great. Now, for the folks who are a little more advanced and they have a 401k, they have IRA, they have money in the stock market, and they're still not sold. Well, here's more proof. Here's more data. In the last 20 years, from 2004 to 2023, S&P, which is the US economy, Euro stocks, which is Europe stock market, and Hang Seng, which is Asia stock market. When you look at all three of those economies, with the stock market going up and down, it averages out to 5.40% growth interest. So assuming you had $10,000 in the stock market, your 10,000 grew to 28,000. So yes, it grew. But guys, what's going to happen to this 28,000 now? Do you get to keep all of it? Is it all yours?
Taxes.
Taxes, right? Uncle Sam is coming for his cut from this 28,000. But the person who listened to Mickey and said, hey, Mickey, I really like what you're doing. I want to get me one of those plans with the living benefits, growing my money, saving my money, not having to lose when the stock market go down. His $10,000 grew to almost 50,000, 48,000. And this is all tax free. All of this money this person get to keep. So who's winning? So again, there's a lot of people that tell me, oh, Dada, I'm good. But the question is, do you want to be better? Because this plan allows you to be better. Now, if you were saving just $200 in the last 30 years, your money in this account averaging 8% growth, you would have right now almost 300,000. Now, some of you may have 300,000 in the bank, stock market, 401k, IRA, TSP, but it's not 300,000. It's 300,000 on paper, but it's not 300,000 in your pocket, because that 300,000 would have to be taxed. How much? We don't know. Your favorite uncle is going to tax it first and give you whatever he wants to after. But this person that has an IUL, he has 300,000 tax-free in his IUL cash value. He really has more. How does he have more than 300,000? Because he has the death benefit and he also has living benefit. Plus, this is just the cash in the policy, right? Or what if you were saving $300 in 30 years, almost $500,000? So for the young people that are on this call, if you're in your 20s, if you're in your 30s, I promise you, you're going to be better than all of us that are already in our 40s and 50s and 60s. Because you know what? You got time on your side. And with an account like this is your future. This is your future. If you're 20-something or 30-something, in 30 years, this is your future. This is how much money you could have for your retirement tax-free. My nieces and nephew, they have these accounts and they don't even understand what it is. All they know, auntie made them sign up for it. They don't know the power. But guess what? 30 years from now, 20 years from now, they're going to realize it. They don't know right now, right? Or what if you had started with $500? Guys, this is the money you're putting in your TSP. This is the money you're already putting in your 401k. But when you put it over here, you get more bang for your buck, right? So a lot of times it's not about finding new money. It's about repositioning or moving the money around to put it in a pocket that doesn't have any holes. Because right now, where you have your money, those pockets have holes. And what are those holes? Taxes is going to eat away at some of your money. Stock market risk is going to eat away at some of those money. That's the holes, right? You put it in an IUL, no holds, no taxes, no market risk. And you're still getting the other benefits. Now, I know some of you also probably have little kids, right? And please, if you have money in a bank account for your kids, or if you have this notorious 529 college saving plan, please, for God's sake, you have to stop it ASAP. Here's why. 529 college saving, yes, it's always a good thing to save, always. But guys, we got to save smart. The same thing I hear people say, oh, I put money in a susu, I put money in a partner. Like, what? What? We got to save smart. Money in a susu or a partner, there's no interest. If you put $100 in a susu, at the end of 12 months, you have $1,200. Where's the interest? If you drop dead, all your family is going to get $1,200. But what if you take that same $100 and you put it in a IUL, and that IUL is, let's say you're insured for $250,000 or $100,000, and you pass away within the first year, how much does your family get? With the SUSU, they're going to get $1,200. With an IUL, they're going to get whatever the death benefit is. $500,000, $250,000, $100,000, whatever you're protected for. So guys, we got to save smart. So if you have money in the 529, let's look at the pros and cons, or how it compares to an IUL. Number one, it's only for college. You are limiting yourself. Yes, we want the great for our kids. We want our kids to go to college, but what if they don't want to go to college? What if they started college for one semester or a year, and then they decide, you know what? This is not for me, Dad. Like, this is not for me. All of my friends are entrepreneurs. I want to start a business. I want to do real estate. I want to travel. College is not for me. Guys, I'm the only one that graduated from college. None of my siblings are in college. None of them went to university. None of them have any degrees. Not all your kids are going to want to go to college, right? So if you're saving money for college and they don't want to go, now that money gets penalized, 10% penalty, because you're not using it for college. And if they do want to go to college, but let's say they, you open this 529 for them in New York, and then they decide they want to go to Maryland, or they want to go to DC, or they want to go to Philadelphia, or they want to go to Georgia. Hello, it's state specific. So now you're going to get hit with penalty, because you're going to have to take this money out because you can't transfer it to another state. Guys, they're not going to tell you these things because they want you to sign up for a 529. They're not going to tell you these things, right? But we are, because we're on a mission to educate families. And let's say they do want to go to college and they're going to stay in New York. They're going to go to NYU like I did. It's still going to hurt you guys. Why? Assets weigh against you towards FAFSA, scholarship and grants. I'm sorry, but St. John University and NYU got a lot of rich people who donates money all the time. There's so much scholarship. I have students telling me all the time, the only reason why they pick NYU or the only reason why they pick St. John is because they got the most money. They got the most grants. They got the most free money. Every school in America have donors that are given big money. Some of these classrooms, they're named by whoever's a donor. Some of these dorms, like, they have big pockets that are given back to these schools. So if your child do decide to stay in New York or New Jersey or whichever state they're living in, you literally just disqualify yourself from getting any free money. You literally just disqualify yourself from getting any free money. Did y'all know that? Like, do people know this stuff? Do we think people know this stuff? Like, why would you literally just disqualify yourself from getting free money. It's like they're penalizing you for saving money. Because you have this 529, you apply to St. John and they're gonna be like, oh, you got money? Okay, use your own money. And now they're gonna give Corey, my nephew, a scholarship because he don't have a 529. So we gotta save money smart. People are saving. They want to do things and they're doing things, but they're not doing the best because of lack of financial education. With an IUL, if your kids decide they don't want to go to college, don't trip. The money is not going to be wasted. Oh, you want to do something else? What do you want to do? You want to start a business? What do you want to do? We could use the money for anything. The money can be used to start a business, purchase for a down payment of a house, their wedding, when they get their first kid, I don't know, whatever. No speculations, no penalty, no restrictions, right? And then when they're ready to go to college, guess what? They're going to get more money because the schools are not seeing their IUL. The schools are not going to say, oh, you got money in your IUL? Okay, we're not going to give you no money. No. But when you have it in a 529, they're going to tell you, you ain't getting no money because you got a 529. Go use out your 529. So guys, this is the information that a lot of people are not aware of when it comes to personal finance and saving and growing and building wealth. A lot of people are not educated on these matters. And so we want to make sure that people have access to this information, but more importantly, they take action, because we've come to see in this business, there's two types of families. You have people who know the information, they're informed, and they're the one that's winning the money game. And like I said, if you're not playing the game to win, you are being played. And I just showed you how you're being played. I just showed us, right? I just showed you how we're being played. So we want to make sure that we're not just taking advantage of this information, but we share this information as well. So some of you may or may not know, we have a lot of doctors, a lot of medical people in our company. The number one reason for poverty is chronic and critical illness. If you work at a hospital, you know this. All of us know somebody that has been affected by stroke, heart attack, or cancer. There's over almost 800,000 people being diagnosed every day with stroke. Heart attack, over 800,000, and cancer is crossing almost 2 million. These are chronic and critical illnesses, the number one reason for poverty. So if you have life insurance with living benefits, which is the IUL I just shared, how is that different from your disability insurance? Your job gives you disability insurance, but it's a percentage of how much you make. Most people are not making 100,000. So if you're only getting 60% of how much you make, how much is that you're going to have? If you're making 60,000, 80,000, 70,000, 50,000, and you get ill right now with heart attack, stroke, cancer, ALS, or any one of these diseases, and you have disability insurance, you're not going to get a lot. They don't give you all your income. It's a percentage. And it's not forever either. So I want to share with you Tim. Tim is handsome. He is young. He's vibrant, healthy. He's in the gym. He works out. Life is great with Tim. But one day, he's minding his business like he always does, driving, going to work. And that day, he got into a fatal accident. Guys, and true story, I was crying last night. I went out to dinner last night, and literally right in front of me, I saw an accident. This guy was riding a motorcycle, and the light was about to change. And obviously he was riding fast, and he lost control of the bike, and the bike literally like dragged him for like half of the block. He didn't hit nobody. He didn't hit a car. It was just him, but it was just an accident by himself. And I swear to God, I knew that even if this guy made it, his life was going to be changed. The bike was on him, and everybody started swarming around him and saying, don't move, don't move. Like, we knew that he had to break some parts. So everybody told him to just stay still. Don't move, don't move, do not move. And I was so like, oh my God, I was praying for this guy's family, because I knew now that they're going to get a phone call that this just happened to their son. The ambulance came, the police came, everybody came. And I got word this morning, it was on the news, that because of his severe injuries, he did not make it. That guy was like in his 30s. He didn't make it. The injuries was too much. So here is another life story. This just happened last night. That's why I'm sharing it. But coming back to the presentation, Tim, driving to work like normal, got into a car accident. But thankfully, he had one of these plans that we're talking to you about today with living benefits. And guys, look how much he got paid. Look how much he got paid. Because he has this plan, he was able to be paid living benefits by Transamerica, $353,000. Do we think most people have access to $353,000? This is a young guy. He's healthy. He's not a sick old person, right? So today, when you speak to Tyrone, he'll tell you, I am grateful not only to be alive, but I'm living my dream life. He didn't have to downsize his home. He didn't have to sell none of his 2 cars. He kept everything that he had and was able to pay everything and pay his bills and not go into debt. Because some people, when life hit them with a health crisis, they go into massive debt. But you know what? Here now we have another live story, because I told you we got a lot of doctors and nurses in WFG. And here's another nurse practitioner. She don't have the same story like Tim and Tyrone. She got diagnosed with stage 3 cancer. She's a nurse. When she saw the oncologist after doing the second series of tests, she already know this ain't looking good. When they told her it's stage 3 cancer, she's like, okay, lay it on me. What do I need to do? In less than 6 months, she had to stop working. Her job, give her a nice card, put some money in the car and said, you know what? When you feel better, you know, you could come back here. That was it. So quickly, she found herself having to do GoFundMe. And guys, it is so sad. Somebody fighting stage 3 cancer. Look how much money her GoFundMe raised. A grand whopping total of $1,132. GoFundMe. And we can't even be mad with these people for putting $20, $21, $26. We can't be mad with them. It's their money. Everybody needs to fund your own life. Go fund your own life. Why are you asking me for money? Go fund your own life. If I'm going to be responsible and take out a policy that has living benefit, why should I fund you? You should take out a policy too to fund your own life. So we can't be mad with people who don't want to donate to a GoFundMe. Especially now that all of you are on this webinar and you're hearing this information. So again, when you have a plan that includes living benefit, these are all the things it covers. So I'm going to ask you, what protection do you have right now, today, that gives you access to hundreds of thousands of dollars, possibly even millions? Because as I speak to you today, I'm insured with living benefits for 3.5 million. What does that mean? I have access to 3.5 million. God forbid one of these health crises. The Bible talks about being the lender and not the borrower. We don't want to borrow money, but we want to have access to money. What do you have that's going to give you access to millions of dollars or hundreds of thousands of dollars in the event of a chronic, critical, or terminal illness? What is going to be your income protection if you cannot work for 6 months, a year, or 2 years because of a major health crisis? What are you doing to protect your income? And I'm going to give you a third story. This is my ex, still alive, but is not the same. Got diagnosed with stroke, changed his entire life. He is not the same. He cannot walk by himself. He's bedridden. He has a nurse 24 care. He can't feed himself. It is bad. And when I was with him, I didn't know this information. And he had money. He had money. He had businesses. He had properties. Where are those properties right now? 2 of them got sold. 2 of them in New Jersey, Maplewood, New Jersey, got sold because he cannot work to keep paying for them. So 10 years went by, couldn't pay the mortgage. He ended up selling them. It was either he sold them and take something, or he lose them and get nothing. So he pretty much sold them for nothing and got a little of something, right? Because I didn't know this information back then. So today he's living in Guyana, which the healthcare system is not the best, but at least he's managing and living out his last days. And it's cheaper to pay for a nurse to care for him down there. And ever so often he comes up here, but he lost everything. I mean, he's still alive, but all his assets got wiped out with that disease, that illness, right? Income protection. Very, very important. So in closing, if you do not have minimum, and I say minimum, $1 million in living benefits. Remember, there's 2 types of insurance. You have life insurance that pays out a death benefit. That's not what we're talking about here. We're not talking about death money. We're talking about living money, right? $1 million in living benefits. This is money that you have access to. Living benefit covers critical, chronic, and terminal illnesses. Here is a policy that got approved May 7, 2024. And this is not a nurse. We have a lot of medical people in this business. And when they see this stuff, because they're in the field every day, they get it. It hit home. It hit home because they see what they see every day going into the hospital. So this is peace of mind knowing, hey, God forbid if something happens further down the road or old age, I got access to $1 million tax-free to do whatever needs to get done. And with that being said, did you guys find value? What is one thing that stood out to you today? Put in the chat. I want to read it. One thing that stood out to you. And the person that invited you, most of you are guests of Mickey. This opportunity or information that you just heard is threefold. You can decide, you know what, this sounds great, Mickey. Odetta did a great job at explaining it. Now I understand a little bit more about money. And I also want to do what you're doing. I also want to come on board, know this information and share it to my community. If you want to share this information with your community and come on this journey to financially educate and help families, put a 1 in the chat. That's the business opportunity. Put a 1 in the chat if you want to do this as well, just like us. Come on board, get your license, and teach this to your community, because there's only so many people we can reach. The second opportunity is, you said, you know what, this sounds great, and I'm putting a lot of money in my 401k. I have a TSP, I have this, I have that, and now I understand I got holes in my money. So I want to get help and organize my stuff and get me one of those living benefit policies, or get me an IUL for my kids, or get an IUL for my wife or whomever. So you want to be a client. If you want to be a client, you're going to put number 2 for client. 2 for client, right? So 1, if you want to be a business partner, come on board, learn the stuff, get your license, and teach it. 2, it sounds good. You know you need help. Now you see the holes in your personal finance, and you want to be a client. 2. And number 3, can anybody guess what is going to be number 3? Put in the chat. Let me see. What do you guys think is number 3? 3, 3, 3. What is number 3? Wow. Guys, as I'm doing this webinar, I just got a text. Wow. See, this is crazy. I just got a text from one of my clients. She said, Odetta, I just gave my staff your number. She's having a hard time getting covered. She's having a hard time getting covered. She's Haitian. She's going to call you. Right? Guys, when you do good in this business, when you help people in this business, they refer people to you. You ain't even got to ask. Donna can give you a testimony, because we just helped one of her clients who's her co-worker, and the co-worker was practically beating up Donna. I don't know if Donna, are you still there? Let me see. Maybe Donna can share. The lady literally already told Donna, why didn't you tell me? Why didn't you share this with me? And by the way, you need to go tell XYZ.
Yes, I'm here.
But can you share, if you don't mind, giving your testimony?
You know, it was a little funny. Hello, everybody. My name is Donna. I'm an RN. I think what it made me realize is that I shouldn't be hesitant about sharing what I know with everyone now. Even though these are my co-workers, and you are in a job setting where you don't want to think that somebody is going to have this feeling that you're trying to make money off of them, because that's usually the first thing that you hear. Oh, she's trying to get rich, so she wants to give everybody this thing that she's maybe selling. So you want to guard against that. But there will always be those people at your job who you know very well, who you're really close to. And I think maybe what you have to do is just share it with them. Take the risk, because they don't know what you know. That's what I learned today. They really don't know, and they need to know. My client was upset with me. I felt badly, because I thought, but I didn't really know how to tell you, how to share this with you. But eventually I did, because she would tell me stories about her family and her kids. And I thought, man, she could really use this help, but Lord help me to tell it to her in a way that it wouldn't come over like I'm trying to solicit her. And so I didn't even invite her to our public meetings. I invited her to one meeting last week when we were talking about wills and trusts and what to do. I never told her anything about insurance, nothing. But she attended that one session, and through Odette's presentation, she learned about insurance with living benefits. She called me right after the presentation and she said, Donna, I want that, whatever it is with living benefits. And so that's how I made an appointment for her to speak with Odette today. So don't make the same mistake that I made. Please tell everybody you don't know who needs what that information that you have. Thanks.
Thank you for sharing. And guys, it was like not only we're helping this other fellow nurse, but her entire family she's protecting. Like she started asking us, well, what about my kids? And what about my husband? And guys, they all have policies, but they don't have living benefits, right? They don't have living benefits. So in closing, we want to thank you guys for being here. Oh, so the third thing. So I said, 1, if you want to do the business, 2, if you want to be a client, and 3, if you want to be a silent business partner. What is a silent business partner? Okay, you've heard this information, you know it's good stuff, but you're saying, you know what, Odetta, I know a lot of people who needs this information, and I'm going to refer them to you. Or Mickey, you know what? I know a lot of people who need help, and I'm going to just give you their number and refer them to you, and you help them. So being a silent business partner, you have to still get your license. Mickey does all the work, and you get 50% of the commission, right? So we don't want to keep this to ourselves. This is the cure for financial cancer. We want to share this with everyone. And obviously we need a lot of teachers like ourselves to go out and share this information with their community. So I'm going to turn it back over to Mickey to say his last words. And thank you guys so much for giving us the opportunity. And again, if you are a guest, please make sure you immediately after we hang up, because it's early, call the person that invited you and let him or her know what is it you're interested in so we can help you, right? Oh, I also forgot, this living benefit IUL, it's not a free for all. It's not everybody's going to get approved. You have to be healthy. You have to be healthy. So again, this is not something that you want to wait, because the longer you wait, you are risking being uninsured, right? And you're also potentially losing money if you put in money in the stock market and your bank account earn less than 1%. So you want to start the application process. When we do the application process, the company does not take any money. So you don't have to worry about, oh my God, I don't have the money right now, which by the way, if you're already saving money in a 401k, IRA, bank, you're already saving money. You have money. When we sit together, it's just showing you how to reposition and move things around to free up. This client that we're helping, she's not coming out of pocket to find any new money. She's putting money all over TSP, IRA, Roth, bank account, this, like she already is saving. But when we showed her and how to organize her portfolio, then she's like, oh my God, like no, you don't have to find new money. We're going to help you reorganize and put your money in the best buckets that has more benefits and no holes, right? So Mickey, I'm going to turn it back over to you. And thank you guys so much for your time on this Saturday afternoon.
Thank you very much. I'm going to have to clap for the presentation. I know we are running a little. I just want to, add something to this. When I started this, I got my license, and then I got my daughters to sign up for, some small IUL. They got perfect. They call it preferred elite. They didn't even have to do a blood work or anything like that. Just the fact that they are young, they don't have any illnesses, they got approved. I tried to sign up for myself and for my wife. I had to go do blood work, and as I sit here, I'm still waiting for approval. They came back with stuff. They said, okay, we need to get some information from your doctors and stuff like that. So the point of my statement is that when you are younger and you have no illnesses or very little illnesses, that's the time to do this. You don't want to wait till you have diabetes or you have something. Because when you have something, yeah, you could get approved eventually, but it's going to cost you more. For example, if you are going to put in a $500,000 policy, and if you are 30 or 32 and you'll be paying maybe $250 a month or $300 a month, when you have some disease or you are older, you're going to be paying more money for the same thing. So it's easier to have a policy when you are young and manage it than to wait till later in life, when you may have some issues going on with you. So I will entreat everybody on here, if you can afford it. Again, Odeda told you, if you already put in money away in 401k or other vehicles, you could minimize what you are contributing to your 401k or IRAs or stuff, and then put the rest towards an IUL instead of funding your IRAs and 401ks fully. Sometimes they say you could do up to about 15%. But with the IUL, you can put as much as you can. There's always a cap, but the cap is much higher than what you can put if you are in using an IRA or a 401k or 403b and the whatnot. So I will thank everybody for coming. I appreciate everybody. If you are interested in learning more, reach out to me. You can text me. If you call me and you can't get me, maybe I'm on another call with somebody else. Leave me a message, or you can text me. I'm on WhatsApp as well, and I'll reach out to you, and then we can talk further. If necessary, I'll set up some one-on-one appointments for you, and we can go from there. I hope you got something beneficial from this presentation, and you can, if you don't want to do it, or if you want to do, you can also tell your friends, tell your families, everybody you know who might need this, because you never know who will need it. And they can reach out to me. I'm always willing to work with your referrals, and I'll be very appreciative. Again, thank you very much for joining this business grand opening, and I hope to speak with you again. And thank you all the WFG agents who are on here who help with this. Thank you, Odetta, for a great presentation. Thank you. All right.
Okay, congratulations, Mickey.
Thank you.
Let's go change the world.
Yes, we have to. We have to get our communities to build their finance, rebuild their finances, and do great things.
Yes.
Because if you have the money, you can give to charity, you can help people at home,
exactly.
You can help a whole lot of people. If
Yes.
you don't have it, then it's a whole different ball game. So yeah, this is good news for everyone.
Absolutely. Excellent job, Mickey. Excellent job. Excellent job educating.
Thank you, everybody.
You're welcome, buddy. Thank you.
Thank you, Desmond and Na, and who else is there? I saw a lot of people. Angela, Nadia, my family. Thank everybody for coming.